It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Thursday evening, June 30th, 2016. Squeezing out the last few drops of this month of June. We're headed into a holiday weekend in the U.S. tomorrow. Big 4th of July weekend coming around the corner. We got a half day on the schedule, but these markets are not going to wait. They're clearly setting up to give us some great opportunities on the first day of July. Crude oil and the euro are bearish, while the S&P and gold are bullish going into a half-day Friday trading session. But the way things are looking right now, it does look like we have some excellent opportunities for an early in, early out session tomorrow. You know how we always do it. The only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, don't forget to check the link in the description of the YouTube video. Follow that link. Come join me here on the blog for the full-length version. And while you're here, don't forget, if you're not a member here at School of Trade, I got a free pass for you to come out and join me in the trade room as a guest. Grab your free pass if you're a guest here and want to join the trade room. Lower left-hand corner, remember to join the mailing list, your name, your email address, and then check your inbox. I'll send you a welcome email to confirm we have the right information. And then every evening, I'll send you an email when the nightly newsletter is ready to be watched. Also, you can download all the charts you see using in tonight's video below the video tonight. Click that link that says click here to download today's charts. And as always, you can learn all the who, what, where, when, and why about being a student here at School of Trade. Grab a copy of your free trial membership on the right side of the blog. You're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. I can guarantee you that. And don't forget, if you have any questions on the way, I'm always standing by here to answer all your questions 24/7, 365. Hope you guys had a great week with us so far. We're wrapping things up here. Last newsletter of the month and last newsletter of the week. Jumping into the schedule for tomorrow. Tomorrow is Friday, July the 1st. I also want to remind you that as we go into the end of the month, end of the quarter, we do expect to see some extra volatility. Remember, as the end of the day, the end of the week, the end of the month, the end of the quarter, traders do tend to take bigger risks, and combine that with lower volume going into a holiday weekend, we are expecting, hopefully here, to get some pretty good volatility in tomorrow's session. Now, we get some major news coming out of Asia here this evening. If we scroll all the way down, let's keep going here. We got news out of Japan. We've got news out of China. This should be a pretty active overnight session. The big one, of course, being the manufacturing number here coming from our good friends in China. That should get the markets moving here in the overnight session as we head into London tomorrow. And of course, as we go into the London session, Friday, July 1st, we do know that we've got the manufacturing index from Germany and France. We've got the manufacturing from Great Britain, and then the employment rate report coming out at 5 a.m. tomorrow morning from the EU. We do expect there to be quite a bit of action tomorrow morning coming out of Asia and, of course, into London. And then we go into the U.S. session starting off at 8 o'clock Eastern Time. We will be here tomorrow trading with all of our students here until the half day comes to a close. We go from 5 a.m. until 9:45. 10 a.m. is going to be the big news tomorrow morning. And then don't forget, we have that early close, which means I would expect probably after 10:30 a.m. Eastern Time, you're going to start seeing that volume start to dry up tomorrow. Normally, 11 a.m. is going to be our cutoff on a Friday. Again, though, you'll probably be able to smell the barbecue grill getting fired up after 10:30 a.m. tomorrow, because don't forget, not only is this a very, very important holiday for U.S. citizens, we also have a bunch of religious holidays around the world as well tomorrow, too. So keep your eye on the volume tomorrow. If I had to guess right now, I would say 10:30 a.m. is probably going to be when you start seeing the volume drop off. Professionals, get to it early. Get out early tomorrow, make that money. You're more than welcome to hold positions into the afternoon session, but be aware, though, that market will close at 2 p.m. Eastern Time, so make sure you're out ahead of that early close tomorrow. Guys and gals, that's about it for the news here tonight. Looking good for tomorrow. Let's jump into our crude oil, S&P, gold, and of course the euro. Crude is bearish and trading at the lows of a channel this evening. Sellers had control for the entire session today, finishing the session at the lows of the bear channel and completing a measured move objective to the downside. The bear channel tells the sellers the most reliable trading opportunities will be up at the highs of that channel, but that recent collapse back to the lows tells us we may not see a very large correction before this market returns back to the measured move target tomorrow. Buyers have two options right now. Either get to it quickly on the way back to the highs or wait to see if they can get a breakout pullback, hold above 49.30 for the move back to $50 a barrel tomorrow. Sellers will be watching closely for buyer failures as price corrects off the low with a target to get back to the low of day and possibly a double down target below. Basically, right now, we can see the bears, and this, of course, is a follow-up of what we talked about in last night's newsletter. We should not be surprised that we had this deep correction with the exhaustive move we saw going into the $50 a barrel area from last night's newsletter. Now, of course, the sellers took it lower, A, B, C, D, made their measured move down. That's one very big clue. The measured move is a market objective. Whenever we reach a market objective, we expect to see sellers take their profit. Buyers will go hunting for bargains here, and that usually results in a two-legged correction back up to an area of resistance for the next leg down. This is not a bull market, so be careful if you're a buyer right now, but you can definitely tell we have reached the objective here, at least for the short term. You can also see, too, pretty much, well, let's say this is probably one of the ugliest channels that we've seen all week. Crude was relatively ugly on the shorter term time frames today as well, but it appears though that's what they're respecting. You can see they're kind of rattling around at this low right now, and that tells us that the most reliable selling opportunity here now will come back up at the high of that channel to sell back down. Last but not least, though, we really got to pay attention to this really strong move here that you can see. I'm sure a little bit of this was just the buyers getting out with whatever they could get out of this market today after that double bottom at the low, but definitely that amount of strength from the sellers, whether or not it be buyers closing positions or sellers entering new positions, that is a lot of strength. And with that strength, we do anticipate there to be another push lower. So even though we are at the low of this bear channel, and typically we'd expect to see price rotate back up and then back down again, right? Knowing that sellers will be waiting at the high of that channel. We just may not get that. We may not get that. I would expect, though, to see a two-legged correction just because we've already achieved that measured move. But then, depending on how strong that correction is, sellers will be looking for buyers to fail to sell it back down, up at the 49 to sell it back down, up at the top of that channel, buyer failure to sell it back down. And then last but not least, the line in the sand here for the sellers is going to be that 49.30. Remember, with that strong move lower, sellers will be looking for buyer failure. Two-legged correction, buyer failure back down, up into the battle zone, buyer failure back down, up to the high of the channel, buyer failure back down, or up to that final last resort up here at 49.30. Buyers try to hold the pullback, they can't, and right back down. Now, we may see this market, because of this just run lower here, it may just torch down in the overnight session. We get a lot of news coming out of China. We get some minor news coming out of Japan this evening. So we may see this thing just torch lower. If it does torch lower, what you want to make sure you do is use the low of that channel as your guide. Use that as resistance. Use the measured move as resistance, right? If it does get out of hand here going lower, just be aware though, if it pops back above the measured move, it pops back above that channel, it'll be used as support for the buyers as it goes lower. Obviously, the most reliable trade here now is going to be after this correction back up off these lows. Now, if you're a buyer right now, what's a buyer to do right now? Well, if price goes lower here, buyers can look for seller failure, right, and then buy that low. That's obviously going to be pretty aggressive because it is a bearish market. But it will be a double overshoot at the low of that channel, which does give a little bit more reliability to the bulls. So if we do punch lower and they can't hold that pullback, a little bit aggressive, but on the more reliable side because it's a double overshoot of that channel low. Really what you want to see right now, if you're a bull right now, is to get back above that moving average, hold that pullback, and then you won't have much room most likely, but that will give you the opportunity now, at least with more confidence after you hold a pullback, to go back up with a short-term target up at 49s, up at the high of that channel. So really, you've either got to get to it after a double overshoot into seller failure, or breakout, or you've got the breakout pullback above the moving average, or you're really going to be careful up top here. I've got my eye on this 49.30. Hold that pullback above. What may happen too is you may see it break out, pull back, and try to hold above the high of that channel. Careful there, careful there. That's where sellers will be watching for that failure back off that high. What you're really going to see is see it get and stay above that 49.30, and if they can, the target then, of course, is back up at the big round number at $50 a barrel. Just opening up here in Asia. We should see some fireworks here in the next few hours, so keep your head on a swivel tomorrow, right, when it comes to crude. Should be a pretty good session. Get to it early, though, because we do have a holiday coming right around the corner. Even the S&P is bullish with another strong bullish session with back-to-back spiking channels today. We talked about this last night, right? We're not too surprised right now to see this market with a big bullseye back at 2100. It is still a little bit early right now to be calling 2100. You know, we'll let the market tell us what to expect tomorrow. But basically, the day started with a little choppy, but the bulls clearly took control for most of the session today and finished the move up to the highs of a bull channel to complete the double up target at 2091. The most recent spike in channel, there are two of them on this chart, the most recent spike in channel will provide the buyers with a great support zone to look for traps, and the low of that bull channel down around that 2070 area will be an even better price to buy if they can get an even deeper pullback tomorrow. The sellers need to be careful right now because, you know, unlike crude oil where the buyers could buy off that low, the sellers don't really have much room to the downside because there's lots of support levels for buyers to be gobbling up those swings all the way down to that 2070, really 2074 to 2069 and 3/4 tomorrow. Again, as you can see here, the bulls once again here today, this week has been dominated by the bulls here on at least the S&P for at least. But we know, though, the S&P definitely here started off a bit choppy. You can see here, went into two back-to-back spiking channels. Well, again, we shouldn't be surprised. We really shouldn't be surprised about this right now. This is definitely, I don't want to say we called it, but early in the week, though, we started seeing very clear signs of technical reasons why buyers would keep buying these dips, and we got that 2100 right around the corner. Right now, this is a little bit different situation than we saw in crude. Crude oil actually has room for the buyers to start buying those lows. There's not a lot of room right now for these sellers right now. The most important thing that we can see here is really two important things. First of all, in the long term, this bull channel tells us that if we do get down to this low, buyers will be looking to buy this on a big dip lower down to the low of that channel. Now remember, when we get this price moving this low, right, this low, it's going to be a short-term bear market, which means we don't want to blindly buy it. We want to wait for buyers to enter the market. The sellers will try to sell it back down. We'll talk about that in a moment for the sellers. But the sellers, of course, will try to sell that retracement, and we want to be buying into the stop losses of those sellers, right? It's going to be seller failure into bullish strength. When the sellers get forced out of the trade, they'll be forced to cover their position. That will result in bull strength. That bull strength, of course, turns into pullbacks, and there's a big old bullseye back up at the high of day, and then possibly all the way up to that 2100. Now, obviously, that will be the ideal scenario for the buyers. Really, the sellers have to be careful because they're going to buy the correction zone, they'll buy the low of that channel, they'll buy the battle zone. It won't be until we get and stay below that 2070 area before the sellers really have a wide open space. And of course, our target will be back down at the low of day from today at 2056 half, we'll call it. Now, the second big clue is we do have a spike in channel. And this is the second chart tonight. This is the first of two charts that have these reoccurring patterns. So we'll have another one on the euro in just a moment, and we'll kind of show you how these are very similar but very different at the same time. First of all, we have a spike in channel here earlier today, and this just illustrates the overall strength of this market. This is rare. A spike in channel that does not correct, right, and just punches higher here, right? So it breaks the high and keeps going. Remember, when you're talking about a spike in channel, there are ultimately some simple rules for a spike in channel. First of all, follow the direction of the spike, right? Do not try to counter trend trade a spike in channel. It's just screaming, buy me.